everyone. This is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today, we're going to talk about how child support affects homeownership as well as an auto loan or an auto lease. All right, let's go straight into it. So let's go with home buying first, right? A lot of people are looking to go into home ownership. Congratulations to you if you have started that journey. And then some of you all may be thinking, well, you know what? I'm not sure if I can start the home ownership journey, just because of a couple things. And one of those things could be potentially child support. So let's go into how that affects home ownership. So child support is really simple. Child support is looked at as a debt. Okay. So this is coming from, because there's four ways to look at child support, really two. But depending on the scenario, you're either receiving child support or you're paying child support. Okay. So let's go into paying it. If you're paying child support, and it's a monthly recurring type deal is being taken out your check, and you've been current, and not current by just recent payments, but current since the beginning, since the child support order has started. So there is no in arrears, there's no balance that's due per se. You've been good to go, and there is no like set large amount that's on your credit report. This does obviously affect your income, but it is what it is, right? Ain't nothing you could do about it. And so essentially, with that being said, that's just going to factor into your overall DTI. But the good news is, and this is why a lot of banks go by your gross income. I know it sounds crazy because they're looking at the income before anything has been taken out. And when you're looking for a home, they do look at what your net income, but they really go by your gross, because a lot of people have 401k being taken out, depending on how they have their W-4 set up. They may have a lot of money being taken out for taxes or whatever the case may be. And of course, in a situation like this, where you got child support being taken out automatically, but they go by your gross income. So when you're looking to go into home ownership and you're not behind on child support, there is no due balance, no past due balance, you're not in arrears, it's not on your credit report in a negative way, then you're going to be just fine going into home ownership. Okay. It may or may not affect your buying power, depending on not what type of lender, but depending on the lender that you go through. But most lenders won't have an issue with it. And that's if you're in good standing. Now let's talk about if you're not in good standing, but you are paying it, but you were not in good standing, let's say some time ago, last month. Well, I won't say last month. Obviously, good standing would mean the last 3 to 6 months you've been on top of your game, making your payments. But prior to 3 to 6 months ago, you probably built up an arrears balance. I've seen balances as high as 40,000. I'm not saying people ain't taking care of their kids, but sometimes there's a lot of things that can happen. People can put someone on child support, they end up going to jail, or they may have lost their job. They probably do some stuff under the table, and that arrears amount just built up. I'm not giving any excuses. I'm just saying I've seen legitimate situations happen, and it's unfortunate. But either way, they have an arrears balance. Whether it's 40,000, whether it's 4,000, whatever that arrears balance is, most arrears balances will show up on the credit report. Not all, but most. And the good news is that obviously, if you're on top of the state, that's another small issue. If you have an arrears balance, make sure you keep an eye on that balance if it's on your credit report, especially because that balance is supposed to be reduced, right? Otherwise, if it's not coming down, it looks like you owe a certain amount of money. So keep an eye on that if it's on your credit report. Okay. Next, if you do have an arrears balance, and it's more than likely it's going to be on your credit report, but it's like a larger amount, over 10,000, over 15,000, that's going to be counted as bad debt. Okay. And usually when they count it as bad debt, they usually count 5%. And most lenders normally do that. That's the go-to. Some lenders may charge 1% depending on your other debts and things of that sort. But it's just like, think of it as just like having a repossession that was like 20,000, and then they just count that against you. Okay. They count 1% of that or 5% of that against you. And that total amount is going to reduce your buying power. So at the end of the day, it doesn't necessarily mean that you're going to get denied. It's just going to affect your buying power. Now that could be good or bad, right? And I won't necessarily say good, but it may not be as bad as you think. For example, let's say that your pre-approval would have been 250,000, but because of child support, it went down to like 230,000. Your monthly payment is probably going to be in the neighborhood of about a $200,000 or $230,000 house anyway. So it didn't really affect you. Okay. Let me give you another scenario. We have a client that got pre-approved for 500,000. The amount of money he wants to pay per month is 1,800. So in the areas that he's looking in, with the taxes that though in that particular area is averaging, he's looking at about a 250, 275 type house. So this is a perfect scenario. Yeah, he got pre-approved for 500,000. He's not even going to use nowhere near that amount. So it didn't really affect his buying power per se. So technically it did, but it doesn't affect his personal budget. Does that make sense? He got pre-approved for 500,000. Let's say he had child support and it brought him down to, let's say, 450. Doesn't matter because he's not going to use 450 anyway. He's still using 250, 275. You guys get what I'm saying? So it would only suck if you the houses you want are like 200,000. You got child support. It brought your your buying power down to 180. So then it would suck, right? And what are some things you can do? Well, you could throw a lump sum at child support, right? And that's another thing too. You try to see what you can pay off. Some of this stuff, is really affecting you, and some of this stuff is not really affecting you, especially if it's child support. Okay. So that's essentially if you're paying child support and you're trying to go into home ownership. Now, if you're trying to go into buying a car, it doesn't affect you at all. Believe it or not, doesn't affect you at all. If you owe child support, you could have 100,000 in back child support. You will still get approved for the car. Now, if you're trying to get a car that costs 100,000 or 80,000, 70,000, they may look a little bit deeper into it, because again, you have a bigger car. So there's a bigger car note, more insurance. Are you responsible? So there's different types of questions once you start getting cars, probably over 50 to 60,000. But most people usually get cars that's like under 50, under 60,000, so that's the safe area. If you're like, because you got to choose. You can't be like, well, I'm not going to pay my child support and I want this, $100,000 car, $80,000 car, $70,000 car. You got to make a decision. Now, that doesn't mean you can't get the loan. That just means it's going to be a little bit more tougher for you to find the lender that's going to actually do that. But in most cases, they're not tripping. Okay. They figure, hey, that's you pay child support. And child support, it may not necessarily hurt your credit report. Because usually when people got child support on there, especially if they have like a past due balance or they're in arrears, it's been sitting on there. So you probably have been building up anyway. You could still be a 700 credit score, well over 700 with arrears back child support. Now, it really depends on another thing. Some states actually report payment history of child support to your credit report. I'm not talking about the good payment history, although some of them do. They're really slow. A lot of states don't have the funding to have a department be on top of that, to be on top of payments and reporting it to the credit bureaus. That actually takes work. Okay. So in most states that you're probably not going to see that, but it's usually if you have arrears and it's sitting there. But again, buying a car won't be a problem. Leasing a car shouldn't be a problem. All right. Just stay under 50,000. Now let's go into if you are receiving child support, right? That's the fun part. So if you're receiving child support, it does count as income. It is optional to tell whomever is asking you about your income status. So let's go into buying a home. By law, you don't have to let them know that you're getting child support, although I strongly recommend letting people know that you get child support, not your friends, family, neighbors. I'm talking about like the lender, because again, more income is going to show more stability. More stability is going to give an easier loan process, especially throughout the entire buying process. Okay, so you have that plus. Number two, now it all depends on timing. So you can only really count, lenders only count child support income if you're going to be getting that child support income 4 years after the loan closes. So let's say, for example, you have a 16-year-old. You've been getting paid child support for quite some time. You and I both know that child support is going to cut off when they're 18. So that's 2 years from now. If it's going to get cut off, in under 4 years, in under 4 years, they cannot count that income. Does that make sense? Now, let's say you got a 13-year-old, right? And you're getting paid child support. 4 years plus 13, that's 17. That means that you now can include child support. Okay. And some of y'all getting some real good child support checks. We ain't gonna go into that, but hey, but that's what's on the table. Okay. So that's really what home buying is. The question, the mortgage people the lender's only going to ask is, are you going to be getting this 4 years from now? And that's essentially looking at the dates of what the child support paperwork is and stuff like that. They want to see the consistency. Let's take a step back going into paying child support. Now, is it being taken out of someone's check or is it through cash? If it's through cash, it's going to be difficult. Okay. It's going to be difficult. There are ways to kind of get around it, but who's to say that that's actually for child support? A person can have a business on the side. They could be babysitting. They could be doing anything for that money, right? And not in a negative way. I don't know what y'all thinking, but you know what I'm saying? Because it's cash, there is no paper trail on that. So try to get a paper trail situation going. Zelle and Cash App and stuff like that technically is a paper trail, but you still have to do what they call a LOX, a letter of explanation, saying, hey, him and I agreed, yada, 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 and I've seen that fly as well, as long as that's consistent. It can't just be something like, they'll do a monthly average. Some guys, not just guys, women pay child support too, but they're going to be looking at some type of consistency. Is it every week? Is it every 2 weeks? Is it every month? What's the average on that? So court order is going to be the best route to go, but if it's cash, try to create a paper trail as much as possible. Never cash in hand, at least Cash App, Zelle, all the stuff that's out there, Chase Quick Pay, all that stuff, right? So try to have it where it's electronic. Now going back to receiving, if you're going into homeownership, they just want to look at that 4-year rule. Now let's go into buying a car. You can use child support income to purchase a car. Income is income. A bag, as we say in today's age, a bag is a bag, right? But either way, if you're getting child support, again, they can count that towards your income. There is no time frame on that. They just need a letter. They just need a letter showing that you know what amount you're going to be getting. Then that falls into disability or social security income, things of that sort. I just haven't done a video actually on those types of incomes. And there's nothing wrong with those incomes. A lot of people get those incomes for various different reasons. So don't try to judge people. You have no idea what's going on in their personal lives. But in a situation like this, sometimes child support, some people pay child support and they're not upset about it. Like they get it. Not everyone's upset about it, but again, you can use that as income. Hope that video was helpful. So if you like that video, like it, you want to share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you all so much. Have a great day.